All right, so this is exercise 15-10, and the purpose of this exercise is to look at a series of transactions and to understand, hey, do these go on the income statement or do these go on the balance sheet? And really the key on where it lands is if it's something we spend money on that's going to end up as part of our product, something we sell, we don't expense it when we spend the money. We actually want to wait till we actually sell the product before we expense it, and then it hits the income statement. So if you remember in financial accounting, you only record the expense, which is cost of goods sold, once you've actually sold the product, not when you spent money on it. So let's go ahead and work through this one. So we have Digital Vibe Manufacturing Company, and it gives us a list of transactions. And the first thing it asks for is to prepare the March income statement for the company. So let's just start going through these. And so the first one, A, purchased materials. Okay, that's part of our product, and so that doesn't go on the income statement left yet. So we're going to go ahead and come back to that one later. B, we used direct materials in production. Okay, that's related to our product, but we haven't sold the product yet, so that's not going to go on the income statement quite yet. All right, we incurred direct labor wages, same deal, part of our product, not an expense yet. Incurred overhead, part of our product, not an expense yet. And then we have transferred a work in progress to finished goods. Okay, so that's just from one balance sheet inventory account to another balance sheet inventory account. F here, sold goods for $875,000. Okay, now that is our cost of goods sold. That's on our income statement. So we want to go over here to our cost of goods sold to do $875,000. Oops, I'm sorry. We sold it for, so that's our revenue. So that's what we received. So $875,000. There we go. And the cost of those goods was $525,000. So let's just put in a formula to get our gross profit. So gross profit of $350,000. Okay, then in H, we incur selling expense. And so selling expense is not part of the product, which means we expense it as we spend the money. So here, we've got selling expenses of $125,000. So the next, we have administrative expenses. That's not part of the product. It's a period cost, not a product cost. Let's go ahead and sum that up. So now we can take our gross profit of $350, subtract out our total operating expenses of $205, going to give us a net income of $145,000. All right, then in part B, it wants to determine the inventory balances at the end of the month of operations. So now we want to look at our inventory accounts. So we have materials inventory, work in process inventory, and a finished goods inventory. And so we start going through all our balance sheet transactions. And so, okay, so we purchased materials of $168,500. And then part B, we used direct materials of $149,250. Since it's a decrease, I'm going to go ahead and make that a negative. Let's just put our sum formula in there to get our balance. And then we have work in process. So we incurred $360,000 in direct labor wages. That's going to make our work in process go up. In part D, we incurred factory overhead, so that's going to make our work in process go up. And then we transferred, let's see. So part E, we transferred $600,000 from work in process to finished goods. So that's going to come out of work in process, and then we're going to go in to finished goods. Actually, we need to do the same thing with our, as we transferred that $149,000. So that we used of direct materials into production. That means that went out of materials inventory and into our work in process inventory. There we go. And then it tells us here in part G that we sold goods with a cost of $525, and so we had $600,000 go into to finished goods, and we have $525,000 coming out. And there we go. Now we have our ending balances, assuming that the beginning balance was 0, I guess, of our inventory accounts. And so just as a reference, let's just go ahead and plug in our references. So for example, F cost of goods sold, just kind of so you can see where each of these numbers is coming from.